Thank you very much. Hello, good afternoon, everyone, and thank you for joining us today. And or my fellow panelists, lovely to have you all here. We get started. I just wanted to set the stage in terms of what we want to cover in the next 50 minutes. The key element of what we want to be able to convey today is around the change and the impact artificial intelligence is going to have around customer experience from a financial services perspective. And to set the stage, artificial intelligence is everywhere in the news today, from the success of AlphaGo to the recent news that I read about some of the Australians believe that artificial intelligence can make better decisions than elected government representatives. It's always in the news. And if you think about the investments being made around this artificial intelligence, in the space of artificial intelligence, in 2017, that number was about $12 billion, and it's expected to get to about $60 billion by 2021. So that's enormous investments that are happening in that space. And if you start to think about what impact it's going to have at a macro level, some data point demonstrates that it's going to be a 15 trillion increase in GDP by 2030. So we're really talking some really serious impact artificial intelligence is going to have across the board. Now, taking that into the next level to talk about what impact it's going to have in financial services. And if you think about financial, in the space of financial services, from providing personalized services and better customer experience to keeping the bank safe in terms of managing the risk better, the fraud better, and money laundering and all of that, and to keeping the regulators happy about the quality of the data that you have in your process, the impact of artificial intelligence is all pervasive in financial services. With that opening remarks, I wanted to ask my fellow panelists to share their thoughts and views on, as an opening remarks from their perspective before we launch into the questions. So maybe I'll start with Al, you to my left, if that's easier. It's just that you're right next to me.
Right, it's always a mistake to sit next to this MC. Look, I think artificial intelligence gives us a major opportunity to truly look after the customer and yet scale up to very high volume. So my job at the Prudential is to make sure that customers are healthier and wealthier than if they had not dealt with us, right? But you can't do that without scalability. And artificial intelligence, not only the usual thing about knowing the data and knowing the customer intensely, but also be able to handle their life changes and making sure that you can keep up. The most important thing about AI, though, I think, is a learning loop. So you actually learn what did or did not work. And people forget that artificial intelligence is not about the glitzy things, but make sure that you do absolutely what's good for the person. And this time, that can completely align with what's good for financial institutions. So I don't think, for the first time ever, I think, it's not mere automation, it's actually alignment. So we can look people in the eye and say, we'll look after you, and by looking after you, we'll do better. So doing well by doing good is now feasible. It's not just a terminology.
Yeah, I'll talk about from the financial institutions perspective. We all experience AI, right? Every day, our life. So financial institution, financial industry is not an exception. So it goes to all aspects of financial activities, covering the customer experience and product development, product offering, and channel orchestration, and also operations like efficiency and fraud detection and risk management. So AI is present, right? And then it's getting better and better.
Yeah, I think one of the biggest promises of AI when it comes to financial institutions is the reduction in friction in the interactions between the end consumer and the financial institution. The lower the level of friction that the financial institution has with their end consumers in their digital journey with that institution, the higher the satisfaction of the end consumer. And I think leveraging AI, there's a great deal of confidence that the FI can have that they're dealing with the person that they think they're dealing with, and then that enables them to have to create a friction-free environment with their consumers and maintain a high degree of satisfaction.
So I think, artificial intelligence has been around for a long time. I don't know if all of you guys know that artificial intelligence has been around since the 1950s. And so there's a lot of buzzwords out there in the market, even, as we wander around the pavilion, everything's AI. But what does that really mean? And I think what we see is that the advance in technologies today, you hear about supervised machine learning where you're training a computer to find something that you already know about. Unsupervised machine learning where it's really finding unknown unknowns. And then there's even more advanced technologies. It's really, we call our technology intuitive artificial intelligence. And it's really these technologies have an awareness of context, an awareness of, and learning and understanding behavior like a human does. And so the impact of that is far reaching because at the end of the day, consumers want to trust their financial institutions. Trust is something that's earned. And they're trusting financial institutions with their most valuable asset, their identity, who they are, their information. Money's important, but who you are is even more important. And so what we see is that actually bad actors, hackers, cyber criminals, money launderers, drug cartels, they're actually using artificial intelligence to attack banks. And so if banks are one of the best things that they can do is protect their customers and protect their information, their identities. And so if you're defending yourself with a rule-based system or legacy technology and the bad guys are using artificial intelligence to attack your bank, it's like showing up to a gunfight with a knife. You're really overmatched. And so what we see is the forward-thinking banks are now really adapting artificial intelligence to protect their assets and to ensure that their customers not only are having better experience and better efficiency and effectiveness, but they're also actually able to defend and protect their customers and earn their trust.
Great, Jim. That's fantastic. Maybe let's deconstruct this a bit, right, for the benefit of the audience here. A lot of, and by the way, the questions have started coming in, so thank you, and please keep sending in your questions. But perhaps if we can look at the developments in leveraging artificial intelligence financial services, we seem to be falling into two core, and you can correct me if you're going down the wrong path there, but we seem to be falling into two core areas. One, what's going to keep the bank more efficient in the way they operate, i.e. keep the bank safe, right? All the credit risk scores and fraud management and all of that sort of it. And then the other set, which is what the consumers like us are looking for, is better experience and better personalization and better understanding of our needs and how to deliver that. And so one of the questions I've received as well kind of speaks to that, which says customer experience is highly personal. Do you really believe bots are going to be delivering that experience to us? So what I'd like again, this is a great panel, two financial institutes delivering better customer experience, investing in artificial intelligence, and two fintechs who have artificial intelligence at the heart of what they're doing, to give your perspective on this, and perhaps some customer experience examples that what are you trying to do in your organization?
So I think we've done improvements. So I'm going to divide this into two parts. Firstly, the improvements, and then the more radical solution. So when people make claims, typically they're quite distraught. I mean, something's gone wrong, which is why they're making claims. So they want their money fast, not because they're committing fraud. They want some money quickly to repair the risk in their lives, as Mike well said this morning. So we've now reduced that. By using AI, we can predispose claims and things down to, I think we go from days to now certainly minutes. Mm-hmm. We will not claim heroics, it's not seconds. Secondly, when you have a chatbot, everybody's deployed chatbots, but what we like to do is have our chatbot actually learn, so it's actually answering questions which are not just for our efficiency, therefore, hopefully, it's not personalized to the same degree, but it's for your convenience. So that's part one. We're doing claims, we're doing really all the things you would expect us to do. To answer your question though, we are building, essentially what will happen is consumers range from very sophisticated people like in this room to people who either don't have the time or don't want to are not financially literate, the unbanked or underbanked, and we have to protect them. So having a digital agent, and we are building one, we think we have the beginnings of one, which will defend them, which will hold the customer data. It will then give permission or withhold permission to use the data. It will tell the regulator what the heck we were doing, right? And so the regulator can spy on us, as I like to put it, a bad term, but 24/7 and not after the event.
Right.
Yeah, I think
Those are things you will see.
Sorry, yeah, Jim had a point.
Yeah, I was just going to say, we were talking backstage about how we started our careers. And I actually started my career as a financial planner. I was a stockbroker and I did financial plans. And you know, there's an inherent conflict if you're a financial planner. Do you recommend the products that you get the highest commission on? Or do you recommend the products that are the best for the customer? And that's one of the reasons why I wasn't a very successful financial planner. I went into regulatory compliance and that kind of thing. But the digital agents, you know, there's a lot of companies out here. There's a few today. I think Personetics is one of them that does like a self-driving financial planning. And the reason I like that is because I think it can deliver a good experience to the customer, but it also can give them objective and good advice, where the bias and the inherent conflict for, you know, commission-based processes, I think the artificial intelligence, and that's an example of how it can really bring benefit to the customers.
Right. Bonghan, do you want to add from you?
Yeah, basically, corporate as a company try to maximize their revenue, right? But without benefiting customers, anything will not be sustainable. So let me give you one example. DBS trying to develop the opportunities for SME customers by analyzing supply chain data. So they constructed customer graph network that covers the supply chain relationship and company profile and product holdings and the business transactions, and also external data such as SMP, the buyer supplier information. So based on that, they run the two AI techniques, the recommendation engine and credit accessibility engine. So recommendation engine gives provide better way, economic way of business implementation to the customers, which in turn increase revenue. And then also risk engine help them manage their risk more efficiently. So it's kind of beneficial to both.
Excellent. Right. Brad, if I can perhaps, and it's a great question that I have from the audience around the fact that AI is extremely expensive to implement and use. Is there a cost-effective way to do that? And I'm going to actually then overlay that with another question around the fact that AI gets better as it consumes and learns more data. So the longer it learns and the longer it understands, it's going to get much better. So it's a long, it's not today, it's future, isn't it? Why would anybody want to invest?
Well, there's a lot of money being thrown at AI right now, and I would argue it's not as expensive as one would think. We actually put together our company without any financing until about our 10th anniversary, when we did an A round with CVC Capital of $80 million. But for the first 10 years, we did it all bootstrapped. So it wasn't that expensive to build if you got the right minds attacking the problem. But it's absolutely worth the investment, because at the end of the day, you're providing enormous value to your clients. We're kind of a unique animal. We work with some of the largest financial institutions in the world, like Chase, where they're exclusive fraud, and Barclays, and Moneris, and Braintree PayPal, and Venmo, people like that. And we also work with the largest retailers in the world, like Staples, Dunkin' Donuts, Domino's Pizza, insert the name of large retailer here. But the fact of the matter is that we provide unique value to each of those institutions. For the financial institutions, they're able to go to real-time underwriting for their online applications for credit. For the insurance companies we work with, they're able to remit claims or pay out claims a lot faster, because they gain certainty through Kount that they're dealing with the person that they think they're dealing with. And for online retailers, as their consumers are moving to a digital interaction with them, like at Dunkin' Donuts or at Domino's Pizza, where something like 65% of their pizzas are now purchased through apps. That was they were not used to chargebacks and to fraud because had historically been a card-present environment, brick and mortar experience with their consumers. When they moved into a digital interaction with their consumers, right, it was an opportunity to expand their footprint considerably and eliminate a lot of hassle for their consumers. But there was also a lot of new opportunity for people to defraud them. So right, all those opportunities are the direct result of implementing AI at the right place in their interaction with their end consumers. And so okay, people are willing to pay a lot for that.
Excellent. Maybe if I could shift that question to Bonghan and Al-Noor, because you are at the other end actually spending the money in making this. What's your perspective on, is this an expensive proposition for the banks and insurers to stay on top of the game and, and deliver all of this promise? And where are you seeing the value set?
I think as a financial institution, we are not a technology company, but we are inherently fintech company, right? And we use, for example, for the issue detection system, we use Facebook open source Profit in DBS. And that was performed very better that of the previous AI, which is rule-based system. So that means artificial intelligence technology is improving every day so that if you look at your problem and then look at the algorithm that fits to your problem, then you can leverage out a lot. And right, it's getting cheaper and faster. Right?
Oh, great, okay. Is that your experience as well?
So I think, firstly, obviously the open source frameworks, there's plenty available. Also, there are startups which give you a leg up on simplifying it. So there's lots of those. I think, but just to give you the value to your question about does it cost too much money, it doesn't, but even if it did, so I say it doesn't, but even if it did, if you talk about cancers like melanoma and so on, and Dr. Mukherjee gives examples, you can get a 3 to 5 year lead in detection just by simply submitting your Facebook pictures. It's not even, you don't have to go to a doctor. And Mukherjee talks about a personal friend of his where a doctor couldn't see it, he being the doctor, actually, and then he discovered. So I think it certainly is worth doing, and as those of you who haven't started, I would urge you to just start probably with one of the two frameworks you all know about, but people is crucial. Don't get hung up about costs unless you hire the right person first, and even 21-year-olds can do this stuff.
Oh, great, okay. Jim, I'm also, I'm interested in your thoughts on this, but I also want to, from a fintech perspective, the rise of the fintechs, because that's probably what's moving the needle in this space for FIs as well to invest. So perhaps if your take on that.
Yeah, absolutely. One thing I'd say about just about the last question is, newer technologies aren't as difficult to deploy as the classic AI, where you have to have labeled data and you have to have very curated data to feed them. Most of the new technologies like ours are really unsupervised, and they're API based, so they're actually very easy to deploy and not very expensive. You can get down the road very quick. The dynamic that you're mentioning about the rise of the fintechs is very interesting. Because, banks have, a lot of legacy technology in their back offices, and they're regulated entities. They have layers of regulation, and global banks have even more. And the fintechs are coming in. They don't have the legacy technology. They have brand new shiny technology, and they have no regulatory really oversight to speak of. So they're able to actually offer bank-like services. And they're able to do it more efficiently and more effectively, and they're really starting to eat into the market share of the classic banks. And so what it's doing is it's pushing the banks now to take more risks, to be able to move faster towards the digital channels than their back offices might be able to keep up with. And so using artificial intelligence to help protect the bank, like I was mentioning before, to make sure that you have the proper controls across all of your channels is really an important dynamic.
Okay, maybe you're shifting gears a bit. If you talk about data and analytics, this has been there for the longest of the time. You mentioned AI has been around for the longest of the time, but the use of data and analytics in financial institutes has been around for the longest of the time. And I was in a recent board meeting with one of the largest banks, And I was asked this question, why is it that most of our data analytics initiatives have failed? You might want to answer that, but I guess the answer that I'm looking for is how you believe AI is better and how that's going to deliver more value than where data analytics did not do. So, Al.
Yeah, I think partly is you could do the analytics, but you can't get the marketing guys or anybody else to actually act on it. And then you don't have the closed loop of saying, okay, we acted on it, it didn't work out, what's next? And I think what AI is doing, which is different, is firstly, you can automate the action, and secondly, you can automate the learning. And to your point about unsupervised learning and so on, very important point, you can now automate this process with 3 people. So you can try experimentally things which you couldn't try before. And if you're wrong, but you only wasted a little bit of time. So I think it is and the sheer cost of doing this is what's going to drive adoption. And don't believe all the hype about AI is a very difficult subject. Of course it's very difficult, but you can train people within months, and there's some really great Singaporean institutions doing the training that we've met.
Bonghan, you want to?
Actually, that part is depend on the problem specific. For example, we use chatbot. DBS use chatbot, and that chatbot runs on their own, developed ontology, and that handles 80% of customer requests. It's amazing, right? And such thing can get hard from the data analytics. At the same time, they have another AI project that the call reduction and customer experience enhancement. So the consumer part in DBS, they receive 5 million calls per year, and each call costs as much as about $7. So they decide to have a predictive power by analyzing the customer's behavior, and they apply several AI technologies to find out what customers they do before calling and what kind of service they want, and which customers are likely to use the digital channel. And they use various AI technology, like some classification model, some is natural language processing, some is a neural network. So it's kind of dependent on the problem itself. So
that's a powerful message in there, right? In the problem statements, you got to see the value. But I go back to the point that Al-Noor made about what's different in AI. It's automated. You're not waiting for someone to take action. The action is actually being embedded into the process, and therefore less chances of it either being acted upon or not is a very important element of that. So that's a great point. But Brad, perhaps if you can give your perspective more from how you seeing your customers leveraging whatever your AI-powered tools, and how are they getting the benefit of it? Some examples from your experience.
Well, we have a lot of use cases for our technology. Most of them originally surrounded financial transaction fraud and preventing it. Now what we're seeing is our consumers are moving the AI decisioning and processes forward in the transaction to their first interaction with consumers when they set up their account. So they're protecting against account creation or account takeover fraud. And they keep building upon this, learning from not just their transactions, but the transactions of all the thousands of other clients that we have around the world. We see transactions in about 180 countries on any given day. And so they get real surety that they're dealing with the right person by the time anybody gets to the point in time where they're dealing with them in a financial transaction. So if it's a merchant, before they get to the order form. What that enables them to do is, before the consumer ever gets to the order form, identify that this is Brad Wiskirchen, he's a good consumer, and he's the type of person that I should upsell to. And so before they ever get to the order form, the merchant's able to serve them up with the appropriate orders. Or, this is Brad Wiskirchen, he's a schmuck, and I should probably be downselling him because there's a heightened likelihood that this will end up in a chargeback. So by moving our AI intelligence and the data that we send back to the merchant forward, they're able to take action very early on in their interaction with their end consumer.
Great, thanks. Jim, if I can ask you a slightly different question, given all that's happening with AI, you would expect, more people to be confident about what they get out of it. But a recent study that we did at KPMG on a global CEO outlook study, 67% of the CEOs said that they would rather use their own intuition over data-driven decisions. Now, that's a pretty significant number of CEOs not having the confidence in the data that's being churned out. And so while organizations are talking about moving to a data-driven strategy and data-driven decision-making, you have this interesting conundrum where the CEOs don't believe in that. What do you say in there?
So there's a lot of parts to that. I think one of the big challenges is just the explosion of data. We create more data every 2 days than was created from the beginning of time until 2002. So what's happened is all the big financial institutions are creating data lakes, but data lakes become data sewers because there's so much data that they can't really make sense of it anymore. And so a lot of the, again, older technologies and legacy AI systems aren't able to really gain insights. It used to be like trying to find a needle in a haystack. It's really more like trying to find a needle in a stack of needles. So I can understand why the CEOs had lost confidence in those legacy approaches to the large data sets that are out there. Now what the newer technologies like ours do is we actually bring insights to humans in a way that they can understand it so that they can take action on it. And I think you'll see more and more of that as we talk about the impact on the consumers and how that impacts their experience, because using advanced technologies to make sense of all of that data, to find the really relevant needle and stack of needle event or item that you want to present to a consumer, and then presenting it to them in a form that they can understand it, really enhances the experience both from the CEO perspective, I think, as you guys will tell me in a minute.
Right, sure.
I add that comment. And it's quite surprising that 75% depends on intuition. Intuition, or sometimes gut feeling, right? It's emotion or instinct. They are considered as unique to human over machine's computational power, but not anymore. They are not humans' protective area anymore. The key implication of AI success is that what people call intuition is actually implemented as an AI program code. So that's output of mathematical computational algorithm. So we already experienced such a thing in AlphaGo, right? Isidore, who lost games against AlphaGo, and then we call him. He's called as a god in the Go world, yeah. Right? The reason he was called a god is that his institution power, especially at the first stage of Go games. But that the institution power, that is quite mysterious to the normal people, even to Go player. However, that mysterious intuition is beaten by AlphaGo. So AlphaGo proves that AI takes the intuition as a computationally implementable, and also AI tells that the human's intuition can be biased. Is more likely to be biased decision. So it's very critical to company that CEO has insight to the transformational technology like AI.
Excellent. And maybe leading from there on is the question around privacy. So there's a question about, what about my privacy, which I value greatly? Is privacy trade-off worth it? So maybe as the FIs providing the services, how are you looking at that, and where do you see the privacy concerns being addressed?
So there are a number of concerns. One is privacy of the individual. Then you got regulation around that. There's also on the other side of that is, if you don't use the data, some diseases and health issues will actually cause policy issues, right? And health data has been used in many countries in this way. So I think our answer to this solution will be in many stages. The first stage is really to ask permission to use the data. So that's already being done, and proving to the regulators that but the answer really, and I'm sorry to use technology, but the answer is blockchain with some trade-offs, where the customer data is owned by the customer, and the customer decides on a transaction basis or a frequency basis or a date basis to let us use it. Now, to make it easier, there's many techniques to be needed, but I think that's the ultimate answer, and having complete transparency of when that permission was given. The regulators seem keen on it, but nobody's been approved yet, so we're sticking to the old method for now. But that's the answer, I think.
Great, thanks. Brad?
I'd argue that there really isn't any privacy anymore. Everything about you is out there to be had. In fact, this morning I just got an alert that one of the biggest organizations that sells PII has, as of this morning, started listing U.S. Social Security numbers for basically everybody in the United States for $6. So there's transient data, which is data that they could steal, and then that you can change, like a credit card number. And then there's permanent data that you could never change, like in the United States, your Social Security number. And everything's out there now, particularly after some of the bigger data breaches in the last few years. So the challenge is that your personal data is very important, and the good guys, like everybody on this stage, use it in accordance with the rules and regulations of the various countries around the world. The bad guys don't follow those rules. They've got unlimited access for almost ludicrously low prices to buy all the data they need to create a synthetic identity about who you are. And so that's the real challenge, is you've got to leverage the data that you actually have about yourself to combat the bad guys who may be creating a synthetic identity and proving throughout your interactions with your banks and retailers that you are really you and not the fraudster that's insert name of Eastern European country here.
Great, thanks. Jim, perhaps if I can ask you a slightly different version of this question, and it's actually related to one of the questions we've received as well, is how do you then monitor these AI programs that they don't go rogue themselves and cause damage to the consumer, and how do you manage the risk? So perhaps your experience on that. And
That's really a great question. You know, when you say unsupervised machine learning, that sounds kind of scary. It's in the wild, it's unsupervised. But actually, it's not really that scary. In fact, what you find is the newer technologies actually enable you to make decisions. So what it does is it brings information to individuals, to people, and they can make decisions and classifications about the information that's provided for them. So what you find is these technologies learn and grow smarter over time, and they actually facilitate better information by bringing, but better decision making by bringing the right information to the right person at the right time in the right form, so that they can really evaluate all of that information and make better decisions. But I think it's actually helping people to make better decisions, not making decisions instead of people.
right. And maybe, I don't know, Bonghan, if you want to say, as providers, users of these AI technologies, are you faced with these kind of challenges, and how do you deal with them?
Well,
Do you have a framework in place?
I can look at from a little bit different perspective. Is trust issues, and we use a lot of the AI technologies, right? But trust depends on specific AI techniques, right? And the deep learning was born to the mimic human brain. So trust level for each algorithm has different level of trust. Just like different people have different trust, right? And so we need to have some kind of high-level cognitive, the capability in order to tackle such things, so that the high-level cognitive model is like more like a goal-oriented, and it's a logical, it can deterministic, something like that. So those things can be explained, so explainable. While low-level technology, I mean the low-level, the recognition model, such as natural language processing and the speech recognition and image recognition, that tends to be sub-symbolic and the computational. So it is very hard to explain. So those things can be related to the trust level of the company, because if you cannot explain it, it's they think it's not trust anymore. So just those combination, the high-level cognitive model and low-level recognition model, this need to be combined in order to give more trust to the people.
Right. Okay. Oh, that's fantastic. So, Al-Noor, maybe if I can, get you to financial services is a connected solution, right? You look for a specific solution as a consumer. But a lot of what we seem to see in the space of artificial intelligence and all of the solutions out there seem to be very point-specific, siloed solutions. Do you see, how do you overcome that? And as an FI, how are you forced to string it together? Where do you see the challenges? And I want to relate back to one of the questions that was posed as well, where the point being made, use cases are difficult to formulate. And are we in a case where there are far more solutions than problem statements? So it's a pretty interesting conundrum in a way.
Yeah, look, it's a tough thing, but in terms of your first question, the connectivity, the human in us, we see everything already connected because we have a problem we wanted to solve. So most problems are addressed by, if we end up being wealthier or healthier, the problem solved. We don't really think in terms of banks and insurance companies and so on. We've been driven to it over time. So I think the solutions that will come from an ecosystem. Overused term, but lots of people in this audience are both suppliers and consumers. And I think so we have three things you need. You need massive connectivity, so everyone connects to everybody, which half the world knows how to do because of the Facebooks and so on. Data, which we don't know how to do really, even though we all claim, because nobody's had to deal with big data. We all claim big data. There is no big data, it's only small data pretending to be big. And then lastly, AI, which until we see development of what's called GANs, or generative adversarial networks, which kind of represent me against you, et cetera, you will not see a proper development of this function. But that's what we're working on, to work with others in an ecosystem. And you had Mike Wells this morning, and we hope that all of you plug into us and we plug into you. It's not our system, but it is a customer system, and that'll take a while. But that's ultimately the only thing the regulator should be aiming for.
Let me add to
Yes, please.
The current adoption of financial institution, AI adoption is like more likely a bottom-up approach. So every specific problem use different, the AI approaches, and every problem has different approaches. Different approach, like sometimes they use rule-based, sometimes semantic net, deep learning. Even inside deep learning, convolution network, recurrent network, LSTM with the CTC. There are various approaches. And also different approach requires different format of data. And so all the AI pieces scattered here and there. So it's very hard. Imagine that you need to have one connected the algorithm. And the chances are that you probably start from the scratch, and then all the work you need to redo. So that's why we need AI, the architectural platform that host and orchestrate data, tools, and programs, and then hardware infra, so that such a thing you can create that platform is like advanced cloud service or app stores.
Right, Jim.
When when you have a hammer, everything looks like a nail, right? And so it's not one size fits all. And so you really to the point about ecosystem, there really are different techniques and different data sets that that respond well for different techniques. And so, you know, what we've done as a company is we partner and work with a lot of different vendors who, in different technologies that have complementary technologies to solve an end-to-end business problem. And so what we see is an evolving ecosystem of best-of-breed artificial intelligence companies rising up to form that ecosystem that will solve a complete banking challenges.
Okay. Brad, I might start with you on this question that we've received, which is something that we talked about earlier as well, or rather discussing earlier on. What can be done for humans to start trusting AI? It is hard for people to see their hard-earned money being managed by a machine. How can we change this? And we talked about some of the undesirable outcomes we have seen with the use of artificial intelligence in a number of instances. You can't take chances in financial services. Your response to that?
Well, most AI isn't visible to consumers today. They don't know that it's enabling a frictionless experience or frictionless login, approval of their loan application or whatever else. At the end of the day, it comes down to the trust in AI lives and dies with the trust in the financial institution itself. How FIs grow and develop their governance policies in the world of AI is going to greatly impact their ability to gain and maintain consumer trust. So I'd argue most of the time consumers don't know that AI is even playing a role in their transactions.
Yeah. We talk about robo-advisory, and clearly people understand that, you know, there is more of an automated response they're going to get in terms of their advice. And that's a clear example of, you know, you having to start believing in what the machines are going to tell you. Now, whether you trust that or not is what you're left to the consumers to make a decision on. Is that the right thing for consumers to do? Where would the trust be formed? We talked about trust earlier. So, you know, maybe Bonghan and Al-Noor, maybe you guys can give your perspectives on that.
I think of machine learning in the deep learning side. Fortunately, they can have self-assessment of the system by composition of algorithm specifics and, you know, training parameters, and then result of testing data. So that in stock market, we have the beta value for each stock, right? And that represents volatility in stock market. So in AI algorithm can have such value so that, you know, people are prepared for the behavior of the algorithm. So I think that is better and better for trusting the algorithm.
So it's a wait and see.
Right.
Yeah, so I think in an institution, trust comes from two things, right? One is your track record. So did you actually produce more money when someone gave you some money, whether you did it on an algorithm or human or combination? And Singapore has all three kinds of firms. And secondly, to allow you to test, so we can do a dummy run like a fantasy league kind of thing, where you play with it for a while, see what happens, right? And we offer both. And the third one, which I think is esoteric at present, is to have an AI run against the AI, which we talked about earlier about GANs. And then ultimately that's the only weapon you can use, because you run out of the power of the human brain to explain things. But if the first two are there, if I make you money, most people don't question, right? The human nature being what it is. It's only when you lose money, you'll explain why you lost it. So I'm slightly more biased for the first two. The results are good, but you need the third as an institution.
Right. And Jim, you were a compliance man. I'm sure this was something that kept you awake most nights. How do you see that, the trust being formed in the whole equation? I think it's a very important challenge, and, you know, we can't say it'll happen. We need to be able to demonstrate that for better customer experience. Your take from a compliance perspective, how would you deal with that?
So I think trust is earned. It's not just given, but it's earned over time. And I think that a big part of it is in any relationship where you're building trust, it comes down to transparency, explainability, understandability, and I think results. And so I think that it'll take time for consumers and for banks to embrace AI and to build that trust over time. I think and I think it's already happening.
Okay. Brad, did you want to add to that, or?
No, I actually totally agree with Jim. So
Right. So I'm going to, in the interest of time, I'm going to ask each of you if there's one key takeaway for this audience here from what is artificial and how artificial intelligence is actually improving customer experience, and where do you see that go from where it is today, which is chatbots and robo-advisory, what's probably coming up in the horizon as well. So perhaps if you can share your thoughts on that. Right. Maybe Bonghan, you want to get started.
We see every day, the artificial intelligence is advancing, right? We see the Siri and image recognition, self-driving car. Every day we experience the advancement of AI. Now, question is how financial institutions react to that. So this is kind of AI leadership of the CEO. And as a board member of DBS, if I look at DBS, DBS has a very, the surefire way of the digital journey. So that's the CEO, P.C. Gupta's agenda. And for the last few years, DBS has amazing achievement. The best bank in Asia, best bank in the world, recently from the Global Finance. That's all the digital leadership and AI leadership is paying off. So it's very important for the digital leadership. The CEO must have, right?
Right. Thank you. If I can kind of, give my closing remarks on this, and I'll probably touch upon this aspect. There's a chasm today, and the chasm is the way there is an expectation of you collect the data about me, and how I expect you to use my data for my needs is very different to what financial institutes collect my data and want to use my data, which is more to sell more products and services. The day when we start to see that transform into, we are in your lives and we are here to protect your lives and to provide you better financial security. And by demonstrating that, you bridge the chasm, and that's when people will start to get the trust and the fact that this is towards collecting that data and using that data is towards their benefit and not just for the bank's own profitability. That's probably where the tipping point is going to be in terms of customer experience. And with that, thank you, gentlemen. It was wonderful having you in the panel, and I hope, thank you all for for staying back and listening to us. Appreciate you being here. Thank you very much.